Hey, it's Rob Weberg, and on this channel, we empower people to take control of their futures through expert mortgage, financial, and real estate strategies. If it's your first time watching us, hit subscribe, and don't forget to also get notified on all of our future content. In our lesson today, we're going to be diving into home equity management, specifically creating wealth through smart home equity management and how we can go about doing that. So when we talk about home equity, it's generally going to be the lowest cost way to borrow money. When you look at all the different ways you can borrow money, credit cards, student loans, personal loans, etc., almost without exception, the home equity is going to be the lowest cost. If, credit card rates are at 30%, home equity rates are probably at 10%. If, student loan rates are at 10%, home equity rates might be at 4 or 5%. So when you look at it from a relative standpoint of other interest rates and other costs of debt in the economy, you'll find that home equity, no matter how you access it, is going to be the cheapest option for that. Now, once we're into that home equity, what are the different ways that you can access it? Because there's multiple ways, right? First of all, we're going to be talking about a cash out refinance, which involves refinancing your current mortgage, paying it off, zeroing it out, and taking a new larger mortgage. The difference between the old mortgage and the new one, generally speaking, is going to be money that you're going to have access to in that equity. However, the cash out refinance also comes with the most closing costs, and it's by far the most costly of the ways to access your home equity. The next way to access your home equity is going to be a home equity loan, which is going to be a lump sum, like a second mortgage on your property. And you'll get that lump sum at the closing or shortly thereafter, and you can use that money for any purpose. Then the third option is going to be a home equity line of credit, or HELOC as it's called. This is generally going to be the lowest cost option up front. However, it also comes with a variable interest rate that can fluctuate. So while it may be lower up front, it could end up costing you more over time. The last one that I just want to touch on is an equity share program. I don't offer these, I don't believe in them, but if you're doing research on home equity, you'll see that there's newer companies that have come out called equity sharing companies, that they will give you a lump sum up front for shares of equity in your property. And generally, when we look at this over a long period of time, these equity share companies end up getting 30, 50 or higher APR on the money that you borrowed. But it's not called interest, it's called an equity share. That's how they get away with it. Just be very careful and don't look at those equity share programs because they're almost in all cases very predatory. You're gonna wanna focus on the equity access tools we're discussing, like cash out refi, HELOC, or HELoan as your main options, where you're going to have the lowest cost and the best outcome for you. So what are some factors to consider when you're looking at home equity and accessing it, and what products to choose, right? So HELOCs, home equity line of credit, is going to be best for ongoing expenses because you're going to be able to take the money, pay it back, borrow it again, pay it back. That's only possible with an open-end loan or a HELOC. HELOCs are more flexible, but remember they have those variable interest rates. And then a HELoan, or home equity loan, is going to be best when you just need a one-time lump sum of cash. It's generally going to be a fixed rate and a fixed term, so it's very dependable, very understandable of what you're going to be paying every month, and you can budget for it, but it only gives you that lump sum one time. So if you need more money in 6 months or a year, you have to refinance or take out a whole new loan. You can't just borrow again against it like you can with a home equity line of credit. So you want to be evaluating the return on investment. With any one of these options that we're discussing, you're going to be taking money and putting it somewhere, right? So you need to make sure when you're borrowing home equity that you're putting it somewhere that's going to get a positive return on your investment. You need to evaluate that. If you're getting a loan at a 10% rate, are you able to put that money somewhere where it's getting you greater than a 10% rate? For example, if you're doing that and paying off a credit card that's at 20%, that's a good use of the money. However, if you're taking a vacation with that, that'd be a bad use of the money. If you're doing something with it that has no return on investment, that would be something that you'd want to really question. Is it worth borrowing that home equity? Things that make sense are like renovations that would increase the value of your property, educational investments that'll boost your earning potential, rearranging or reconfiguring debt, the way I was just mentioning, from a higher rate down to a lower rate, which gives you more flexibility when it comes to repayment terms. It may even allow you to pay off your debt a lot quicker because you're able to lower that monthly interest as well as that monthly payment. So those are some of the great things to consider consider when you're looking at, and factors to consider when you're looking at accessing the equity in your home. Now, something that a lot of people get worried about when they're accessing or considering accessing this home equity is gonna be over leverage. And what I'm talking about when I say over leverage is owing more on the house than it's worth, or owing such a large amount that it's difficult or impossible to get out of that mortgage or get out of that property. So this was a big issue back in the early 2000s, because a lot of these equity management solutions or a lot of these cash out solutions to get access to your equity had come about, and they allowed homeowners to access 100% or more of the equity in their home. This was common between, I would say, like 2003 and 2007, okay? And some of those products contributed to the housing bust and the bubble bursting that occurred at that time. But that's all changed now. Generally, these home equity products, you're gonna be capped on a cash out refinance somewhere around 80% of the value of your property. So you're gonna have a 20% buffer there of equity. On a home equity loan or line of credit, I've seen up to 85%. The maximum I've seen lately is 90%, but generally it's closer to an 85% loan to value, which is the value of your property minus what you owe on your property, okay? So you can see if you're leveraging 85%, that leaves you a 15% buffer to stop you from over leverage. So I don't believe over leveraging now is even possible, because there's no banks that are allowing the products that go up to 95, 100% loan to value. The issue long-term that occurs with this and causes the over leverage is, let's say you borrowed 85% of the value of your home, but then the value dropped 20%. Now you're in a position where you owe more on the home than it's worth. That's over leverage. That's what you don't want, because if you step back and think about it, you can't refinance at that point. There's no equity. You can't sell the home because you'd have to make up the difference of what you owe versus what you own. And you'd also have to pay the realtor commissions out of pocket to sell your home. So this over leverage can be a really, really big obstacle. However, if you keep your loan to value 80% or less, I feel like you're in a very good position. The home values would have to drop by at least 20% in order for you to be over leveraged. So you can see it's difficult now to be over leveraged. It's not just something you can stumble into, especially with home values continuing to escalate. One of the biggest advantages of using your home equity to create wealth and just borrowing against equity of your home in general is that the taxation is nothing. There is no taxes on real estate loans. There is no taxes on home equity lines of credit, home equity loans, or cash out refi. And I don't believe there ever will be, because these are loans, and there never has been a tax of loans that I'm aware of, at least in the United States, in the last few decades. So that's one of the biggest advantages to using this type of borrowing versus others, is that there's no taxable event. You can borrow this money and not have to pay taxes on it. If we tell you you're getting, $20,000 in cash out from your loan, you are getting $20,000 in your hands. It's not $20,000 minus taxes, etc. So understand that that's a huge advantage, and why you may want to take a second look at using your equity versus other types of loan products. The last thing that I'll touch on in today's whiteboard lesson is going to be the advice that I would give to homeowners who are considering tapping that home equity and leveraging it. But you want to do it responsibly, you want to do it wisely. So first of all, you want to prioritize your needs over wants. This home equity money is sacred. This is important money. This isn't just something to go frivolous with and do anything you want. You need to be very methodical in what you're using the money for. Look at what the return will be on your investment. How much is it costing you to borrow this money, and how much are you going to make where you're putting the money? You really got to look at that no matter what the return is. If the return is zero, then fine. At least you know and can make a knowledgeable and informed decision. Take time to decide that you want to borrow money against your home. This isn't something to just rush into in a day or an hour. You really want to step back and make sure it fits into your overall financial plan, and it's a good move for you and your family, so don't rush. And lastly, consult with professionals who can help you design that long-term strategy. I recommend a financial advisor, a local mortgage advisor with a lot of experience. That can really help you decide whether this is going to be right for you and which one of the products is going to be best to accomplish your goals. So I hope that today's whiteboard lesson on managing your home equity effectively has been insightful for you. And I hope that now you feel more empowered with actually accessing the equity in your home or your portfolio of properties. I do offer one-on-one personalized consultations, so you can reach out to me directly if you'd like that. My line here is 860-413-3938. You can reach me by call, text, or private message. Again, 860-413-3938. As always, I hope that helps, and we'll see you on the next episode. Take care.